They don't want what we know out there.
How a person can go from really almost nothing to becoming a millionaire by owning rental properties.
He would always buy these flip houses, and I just remember thinking, this guy is crazy. Why would he buy that house?
In the past decade, there's been a huge surge in the peer-to-peer short-term rental market.
Become an insider. So you have to know the rules before you get the game.
Every second counts. So make every second count.
Welcome to the Real Estate Jam. Whether you're just beginning or the best of the best, we're glad you're here. We will share successes, failures, and strategies for the action-taking real estate investor. And now to your hosts, JD and Melissa.
Hi guys, welcome to the Real Estate Jam podcast. I'm JD with my guest co-host, Josh. Josh, how you doing today, bud?
Good, man. Happy to be back. It's nice that you're starting to get more VIP guests coming through the show, so I'm happy to be here.
Yeah, for those of you that don't know, Josh is the self-proclaimed #1 real estate influencer in America.
Soon to be worldwide. I think I have like 18 followers now, so we're getting up there.
Perfect. Well, I think today, Josh, if you don't mind, I want to kind of give a breakdown, not just of our market, but of what we're seeing in the real estate industry as a whole across the U.S., both from the agent perspective and the investor perspective. So I'll just start with you. What are you seeing in the local market, and how do you think that's different from what's happening across the country?
Well, locally we're seeing a slowdown, but it's not a halt, right? So what I've been saying is in January, you could have sold your shoes for $1 million in a half an hour, right? And everybody was buying everything. It was great. Grass was greener. You couldn't, but it was volatile, and we knew it was volatile. So it was only going to be a matter of time before things started to change. So what I'm seeing, at least locally, is you're having to be much more precise with how you're listing properties, right? Your pricing matters, so you don't chase the market down. And for the newer listeners that don't know what that means, right? So if we had a property and the market said that it was worth $450,000 and we list at $500,000, by the time that we readjust to 450,000, the market might be telling us it's 400, and so on and so forth, and we chase the market all the way down. So with absorption rates slowing down a little bit, and with pricing being very important, we're starting to see a little bit of a correction.
I think that to understand where it was, we were trying to chase the market up, and a lot of agents and investors, wholesalers, were chasing the market up. Where you put a property under contract at, say, 100,000, when you go to fix it up and list it, you would expect 150,000 after repair value, but actually by the time you're listing it, it was at 200. So then you go talk to your real estate agent, and they want to chase the market up. So they would list it at 220, and then we get 3 or 4, a dozen cash offers at 250, 300, and we were selling it. And that's and the market had such low inventory in the beginning part of the year, right before interest rates started to go up. That's what we're seeing now. It's almost the opposite. I think you're right in saying that the market has slowed down. It hasn't stopped. What I'm seeing is days on market are starting to go out a little bit longer. And really, I think if you look at the numbers and the technical terms that in our market, we're still seeing a a seller's market. But they're starting to get a little bit nervous. So I think right now we have a little over 3 months, 3.1 months of inventory in our market. And so people are starting to see their properties list for longer. And what I really think is happening is, like you said, we don't want to chase the market down. I don't think the market is coming down, but I'm seeing all of the properties being listed for probably what they should appraise at, not this $20,000, $30,000, $40,000 above where the appraised value should come in, or what the comparable sales are coming in at. And I'm also seeing some price reductions, but not price reductions from the appraised value. I'm seeing these agents who still want to be pushing the leading edge of the market. They're having to bring their prices down to a more realistic appraised type value. And we're also seeing that on the retail stuff, some of the agents some of the owners are starting to give some concessions, not a ton, but definitely they're a little bit more flexible. Maybe they're going to buy down points or agree to get some stuff fixed, where in March, we weren't seeing any of that. It was take it or leave it, give me your best cash offer or move on.
Yeah, we were losing $100,000 cash appraisal gaps. Right, like that was a losing offer, and it was crazy.
Yeah, and it's definitely turning. I think as properties sit on the market, definitely for homeowners, property sitting on the market, they're starting to feel a little uneasy if they're in a position where they need to sell for a reason. If they're just selling because they want to get rid of it, they don't care. They'll let it sit still. What I'm seeing is a lot of the investors that we've been dealing with, they're starting to get worried about pricing it right and getting it moved. One, they only have a certain price that they can go down to because they're in it for that. And no investor gets into the business to not want to make money. But they're also looking to make that profit. And we're seeing those profit margins shrink down a little bit. People aren't willing to pay as much for rental property in this market, or short-term rental property in this market, because they got to pay so much on interest rates. So I see a lot of the investors starting to get nervous, and not just here in our local market, but I'm seeing that, kind of across the country from some of our mastermind. I know Seattle and San Francisco, there's some of those neighborhoods that have seen, 40% price decreases and that kind of stuff. So there, and properties are starting to sit on the market a lot longer there. And I think that those markets, the West Coast markets, and I'm sure that it's a similar thing is happening up in New York and some of the other leading markets. I think we're seeing a lot of investors get a little bit scared, and a lot of homeowners wishing they would have sold a couple of months ago.
Yeah. What was it we heard over the week? It was like, it's not a bad time to sell. Obviously 6 months ago was better, right? But 6 months from now will probably be worse in regards to how much, money you can get for at least a little bit.
Yeah. So one of the things that we were talking about too is, all right, so I purchased a flip. Maybe I got it at the right price. Maybe I didn't, but I'm about to list it right now. What kind of strategies do you see? One, pricing is always important, but what are you seeing to these properties? Because there's still some properties that are getting sold within a week of being listed, right? They're priced right and they're done well. What are you seeing, or what are your recommendations for getting a property sold in this more balanced market?
Well, it's going back to the basics, right? So that's my opinion is you have to market your property correctly, right? Because there's two big things you and I both know are, is it marketed to the right people, and are enough people seeing eyes on it, and is it priced correctly, right? If you get A and B correct, you have a chance of moving pretty quickly. And so there's little tips and tricks that you can do is getting rid of a lot of the buyer's issues that they might have, right? Offering some credits back at closing, but making sure if you have a property and you know that primary homeowners are going to be your main clientele, making sure it's ready to go, right? Making sure it's going to have low necessity for repairs on inspections, making sure, if a survey is already completed and done, right? And pricing it correctly so that it's going to move quickly. And getting all that stuff ready. So if you really need, in a worst case scenario, if you really needed to move this property as quick as possible on market, you could get all those things done for the buyer's end.
Yeah,
right?
that's the thing we were talking about. I don't know if it was yesterday or not, but doing your pre-certified home, kind of similar to the used car salesman who does all the certifications and inspections beforehand. That's also going to tell you whether you're priced right or not, right? If you get an official, why don't you talk a little bit about that?
Yeah, so I'm stealing this from Haas Pratt. I read it out of his book. but he calls it pre-certified homeowners. Right. So you have pre-certified cars, right? When you go buy a car, you get a Carfax. It tells you everything, right? If you had to choose between two cars and one car already has the ribbon on it, right? You know, it's had the oil changes, you know that it's tried and true. There's a warranty that backs it. Well, what if you do the same thing for houses, right? So it's priced right. Here's your home inspection in Florida, right? It has a win min, it has a 4-point, you have your survey, you have your appraisal, right? You need a buyer with a pre-approval and you're ready to close, right? And especially if your agent on the buyer side is using a local lender. I mean, we have local lenders here that can close VA deals in 21 days. And especially if the appraisal's already back, we can probably even kick that back a little bit further, right? As long as we can clear title. And so if you were to put a listing up, right, and it was priced and you had an appraisal, you had an inspection completed, you had a survey, and all the buyer had to do was love the house and buy it, well, you're going to change that closing exponentially in regards to time frame. And so those are obviously, you're going to have a really good trusting relationship with your sellers from the agent perspective, and they're going to have to upfront some capital, right? So you're going to have to talk with your sellers, and maybe they don't have the financial means for that. But if they do, then say, hey, yeah, this is going to cost you $2,000-$3,000 maybe, give or take, depending on it. But this is going to, one, get you the value that you want in the time frame you want.
Sure, definitely. And from the investor standpoint, if you want to get top dollar and you want to, because on the investment side, those holding costs really, really eat into you. So if you want to get top dollar and you want it sold as soon as possible, well, as soon as you list it, get the appraisal order, get the inspection order, so you have that available. That way there's less time, less effort, and less energy that has to go into it. And then you save on your holding costs, and you're beating that market. So you're not holding it for 60 additional days on the market. You know where it needs to be priced at. You know that it's in good condition. You can work on the repairs early. Anything you can do to speed up your closing date as the investor is going to help you out. Now, I'm not saying give your house away, but making sure that it's priced right. And the other thing, one of the other things that I was looking at is we look at national numbers, and we also look at our individual MLS numbers, but a lot of the experienced flippers that I'm looking at, they're even breaking it down more than that. They're pulling the specific neighborhood, the same neighborhood that you would pull the comps for, and they're looking at number of properties on market and number of properties that sold in that neighborhood in the last 6 months. Well, if you have one property on the market, but there hasn't been a property sold in that neighborhood for the last year, then you got a year's worth of inventory, right? And in that micro market, you need to make sure that there's buyers in your market, in your local hyper local market, and you need to make sure that there's properties that we're selling. If you have a bunch of property, if you have 5 properties listed but only 3 have sold in the last 6 months, that's telling you that there might be less demand in that area, or they're all priced too high. So one of the recommendations for getting those properties sold, or your property that's coming on, you got your flip ready to go, is to make sure that as soon as the market starts to stall out or starts to decline, you need to make sure that your rehab is good for the neighborhood, but the quality of that rehab is great. And then you probably want to price it in the middle of those other properties that are around you. You don't want to be the cheapest because you're losing out on money there. You don't want to be the highest price because a lot of people are going to see it, but you want to be the nicest house that you can have with the best rehab that you can do, and the quality of the work has to be good. And then you price it in that midpoint, and you're going to sell faster than those other houses in that neighborhood.
Absolutely. Now I know, JD, with coming from, we both work, the investor and the agent side, but will you speak to a little bit how you're changing up or anything different you're doing in your marketing strategies or lead acquisition strategies with the changing market? Yeah,
well, it's a little bit different, agent versus investor, but when it really comes down to it, it's very, very similar. So what we're seeing is the inventory has almost tripled since April on the agent side, on the retail side. And so that means that a lot less houses are being sold. It's like 50% less houses being sold now than were being sold back then. So that means there's less deals out there for real estate agents to get, but we don't ever want to let the market dictate what our income is. So the only way to solve that is you have to redouble your prospecting efforts on the agent side, or your lead generation on the investor side. So if half the number of properties are selling as were before, that means you need to double your marketing to reach the same, to sell the same number of houses that you were before. So what we're doing is putting a huge focus on prospecting and setting appointments, going on the appointments. You have to have double the amount of appointments if you want to generate the same level of income. On the investment side, we're actually seeing an uptick in leads, but less of those are being qualified leads, meaning there's a lot of people who want the cash offer. They don't want to pay commission. So we're looking at a couple of different things. One of them, Josh, I know you know is we're working novation deals, and we're looking at other ways to partner with the homeowner where they shoulder the cost of the house and we can do the repairs, that kind of stuff. I think when you're an agent, you're not making any money if you're not going on appointments and either securing buyers through your EBBA or going on listing appointments and getting that. The only way you do that is through lead gen, whether you're mailing, calling, texting, whatever it is. You really got to increase your efforts. On the investor side, we're getting more leads, but they're not necessarily qualified leads. So we are ramping up our lead generation, increasing our mailers. We're pulling in more niche lists and really doubling up on the marketing efforts now, because we know if we get the marketing out there, we can get in front of sellers, then we can put properties under contract. And at the end of the day, that's where we make our money.
Yeah, absolutely. No, I think that's I think on both sides, doubling down on the basics is what'll get you through this shift, right? And I think on the agent side, or even on both sides, there's a lot of dangly carrots that can distract you, right? There's all these paid sources, or there's, guaranteed 15 listings in 30 minutes, right? And there's all these guarantees. But really, if you harbor and bunker down on the basics, right? And so the similarities, that I think you were talking about is everything eventually, right? A lead is eventually just to get you in front of somebody, right? And then your sales process should take over from there. And so whether it's open houses, whether it's cold calling, whether it's driving for dollars, whether it's whatever, door knocking, mailers, whatever you find works for you, right? What my personality type and the way I like to market might be different than yours. I know they're very similar, but for other people, right? Maybe you love being in front of people and you're just, you hate the phone. Well, maybe you should pick a neighborhood door hangers, door knock, right? Mail them, knock them, call them, text them, whatever. But whatever you're doing it's going to be consistency. Right? Consistency and keeping high qualified leads in your funnel. And then the magic word, the follow-up.
Yeah.
Right. Put them in, taking the time, put them in their database, which no one likes to do, and then following up with them. It's crazy.
Right. And there's so many automated things. Like you said, it's going back to the basics. And so what we've started to do is I'm blocking out, 9 to 12 every single day is prospecting. All my appointments in the afternoon, putting in offers and a lot of that follow up and other business related tasks will be in the afternoon. It's the prospecting and phone calls in the morning. Now, if you have a big system set up where you got somebody else prospecting for you all day long, that's great. But at the end of the day, you still have to be doing your work. So if you're to the point, which I'm not, where you can just sit back and let your business make its own money, then by all means do that. But right now, and over the next couple months, maybe even years, as the interest rates remain high, you're going to have to make sure that you run your business like a business, whether you're an agent or an investor. And if you're not putting that specific focus on lead gen, everyone gets confused, thinks we're in the real estate business, but at the end of the day, we're in the marketing and sales business. And if you're not doing that on the front end, you'll never have a property to market and sell on the back end. So I think that's definitely what we're doing. Finding what works for you and going deep before you go wide is where it's going to be. If you're not doing consistent lead generation every single day, or you have a system and a plan in place for your business to do it every day, you're going to see over the next couple of months, everything starts to dry up.
Yeah. It's, and the great thing about the modern world is, like, could you imagine if you were getting into real estate in like the 20s, you'd have to like read a book or scroll or something, right? And then figure it out. But now we have all these like marketing monsters that you can find on for whatever it is, right? Whether it's on the investor side, whether it's on the agent side, whether it's both, whatever avenue you want. If you want open houses, well, by God, you better be on YouTube looking up Brent Gove, right? And following all his stuff, right? If you're on the investment side, there's hundreds of people that do that. But the thing is I feel like a lot of people get discouraged because you'll do one mailer, right? You'll spend a couple $100 on 500 postcards, and you'll get one call back, and you'll be like, I thought I was going to make millions. Right. And so, but it's using that postcard to be your entryway into calling them, texting, and building that relationship, right? Getting them to your household name. So when everybody has a mechanic that they go to, right? They, more importantly, right? Especially men, we have like one barber for life, right? You give me one good haircut in the area I live in, and you're going to see me every 3 weeks. Right. And so you want to be that guy when they say, oh, I'm in a jam and I want to sell my house. Well, there's those people that always have those signs up, the we buy whatever's, it's right next to Publix. And you're like, oh yeah, we should go call that number. Or on the agent side, be like, oh, you know what? We have to move, we're changing locations. Oh, let's call Josh, right? You want to be that, that image.
Yeah, being in front of mind when the life circumstances dictates that person needs or wants to sell their house. It's the same for agent, same for investor. You got to be there, but you only get there. You only take up that headspace if you're marketing consistently and you're doing what you're supposed to be doing every day. I think in a good market, everybody can make money. You can do it, like you said, sell your shoes for $1 million. But in a slowing market or a more balanced market, it's the disciplined investors and the disciplined agents that are going to be making the money because they've been building this muscle of disciplined lead generation, lead follow-up over the course of the good market. And now this is where they're going to thrive, and you're going to see a lot of other people start to fall out of the market and go away. I think in the big downturn, 2008, they lost a huge percentage of their agents, just quit being agents, and a ton of investors lost their shirt, over leveraged, all that stuff, and went out. Now, the ones that made it through that and stuck around were able to capture a huge market share on the investment side and the agent side, because there was a void left by all of the agents that were exiting, or the investors that could no longer invest because they weren't capitalized right. And I think a down market can be very beneficial from the investor and agent standpoint. Obviously, we always want the constantly climbing, never know what the highest price is going to be, but there's a way to win in this market, and it's through consistency and follow-up.
Yeah, I think that's perfectly said, right? Everybody's like, all the people that are exiting, they're probably on Indeed right now going like, jobs that pay my bills, right? And rightfully so, man. They're scary times. But if you look back and you really analyze your schedule, you'll see that you're not prospecting and doing the right things as much as you think. And I am 100% speaking in the mirror, right? And so, but I'm sure there's other people. I would imagine that most people right now are probably feeling the same way, for sure.
Yeah, definitely. I think that being able to identify whether you're busy or you're generating income, there's a difference. When you say you're busy, what does that actually mean, Josh?
You're lazy and disorganized.
Yeah, that's right.
Or messy and disorganized.
Yeah.
Which ultimately comes to laziness.
Laziness, right? And I think that's a perfect quote, and it definitely applies to me specifically. You can be busy all day, but if you're not focusing on your income generating activities, which is marketing, lead gen, signing contracts, going on appointments, that kind of stuff, the other stuff, it doesn't really matter. I think we'll see a big shift in the amount of players in the game over the next couple of months, and next couple of months to the end of next year, probably going to see some big things. But I don't know. I think that there's room for opportunity, and we should be looking towards the positive side, staying focused, taking action, massive action, even more action than you were taking before to make up for the shifting market. And remember, if you're buying right and you're putting in enough offers, then you're going to make money in this industry. Absolutely.
Yeah. The key thing you said there was double down, right? Or something along those lines. If the more time you spend on the phone versus more time you worry about paying the bills, they'll solve them themselves, right? And so really harboring down on that, I think is crucial.
Awesome. Well, Josh, if we wanted to send these listeners to come see you and your self-proclaimed #1 real estate influencer, soon to be worldwide, where are we sending them?
Well, I'm on Facebook underneath my name. You can catch me on Instagram, joshmaier.realtor. I post some stuff on there, and you can also check out our short-term rental business page too. If you have any inquiries on that side, it's shorefrontvacations.com or shorefront-vacations.com if you have any inquiries about that as well. But yeah, I'm around.
Yeah, absolutely. And if you guys received any value, please jump over and give us a 5-star rating and leave us a review. And we're going to be here every Monday, 8 a.m. So, Josh, thanks for helping me with the podcast today. And I'll talk to you later, bud.
See ya. Thanks for having me.
Thank you for listening to the Real Estate Jam. We hope you enjoyed today's episode. For more information, check out our website, therealestatejam.com, or find us on Instagram, Facebook, and Twitter at The Real Estate Jam. If you have any questions, feel free to drop us an email at therealestatejam@gmail.com. See you next episode.